coming into Simcoe and looking at some of the trends that we've seen from January of last year to January 31st of this year, you can see again that median price holding fairly steady. Again, that little blip, it's funny. You wouldn't have expected this to come when it came, because a lot of this happened when we got our first rate cut last June. The cut happens, and again, just felt like everything got really slow. And then August was the worst August on record for like 20 years. And it's just not necessarily the timing in correlation with those cuts that we thought we would have had. But nonetheless, the median price holding is a great sign. And those that are saying, where's the 20% market crash? Well, the correction has already happened. From March of 2022, we started our march downwards. And, from that peak, I think when you and I looked at this number last, from the peak in the summer, I think we were down 19.5% or something like that. So that has already happened. Now we're holding steady over this time frame. That big correction, that came down from a peak that had no business being a peak. It's not a real number. So even that 19.5% that we're talking about is not truly accurate to how a lot of people were impacted by the correction in pricing. That would have only been the people that bought in that 3-month window, kind of around the peak.
Yeah. And one thing that's not included in there is, sure, prices came down 20% over the 2-year period, but you're also not accounting for the inflation for those 2 years as well. Let's say it's 2-3%. That's, you're looking at another 6% that those houses haven't grown. So kind of you're almost at a 26%, 24 to 26% drop in housing prices. So that's a significant drop. That's should be counted as kind of recessionary when it comes with the house.
Mm-hmm. Yeah. And so I think the message there to just take away is like, actually, maybe that's not fair to say once we get to the tariff talk. Until that part really comes to be known, the big correction has happened. Right now we're marching along, and the counter argument to the tariff talk is going to be, if they continue to cut interest rates, which now is being readjusted, and we'll get to that, we could see something different in our real estate market in terms of a resurgence instead of that recessionary track that we were looking at. Taking a look here at Simcoe before we move on, was there anything that you wanted to add there, Matt?
Just looking at this, 2 million plus is 217 homes, but it doesn't make up the majority of the active listings by price range like it did in York Region. We can also see the million to 1.25 million, that it's pretty high at 313. And we're just not seeing the sales in that volume or in that area to suggest that we're going to see a lot of strength in there. And those numbers might have to come down, because from that previous chart that we were on, we're seeing the bulk of the sales happening from 600,000 to 900,000. Mm-hmm. So in that range, those types of homes in there are going to see, a lot more action. It's the 1 million to the 1.25, I think, is a little too high. And there might be some price adjustments that have to be made there.
Yeah, for sure. When you see this big boost there in the million to 125, like you said, we're seeing a little bit more stagnation there in terms of active listings starting to pile up.
Yeah,
and then again, still the bulk of these still being detached homes. We're looking at 64% of all the properties that we're looking at that are available are detached properties, detached freeholds.